Good morning for this Monday, September 9th. First market I want to go through real quickly is the U.S. bonds, the 30-year T-bond futures contract. I'm seeing a trade set up down in here. Now, granted, the market's in a downtrend, right? Bonds have been moving down, right? Interest rates have been going higher. What I'm seeing here is, look at the market has retested this low right in here, right at the end of last week. Took out those lows just by a couple 30 seconds, just a couple ticks to the downside. Wasn't really able to penetrate through by a whole lot. So what I'm thinking is if the market is able to penetrate up through Friday's high, right up in here, that would be a buy signal, looking for the market to rally up to this level and test that 50 exponential moving average up in here. Now, the risk to reward ratio on that isn't that good. It's pretty much a 1-to-1. I mean, look at if you're looking to buy the market as it penetrates up through, Thursday and Friday's high, the initial catastrophe stop loss really has to be placed below Friday's low. All right, so let me tell you exactly how I would do this, okay? First of all, Friday's high is 130 and 1/32, and Thursday's high is 130 and 2/32, right? So I would be looking to buy this market at about 130.06. That would be the official trigger to go long. Now, would I go long there? No. What I would do is I would wait for the market to penetrate up through 130 in 6/30 seconds, and then I'd wait for a pullback 5 to 10/30 seconds down off of that, which would put me back at about 129.27.28. Okay, but first I need to see the market rally up through 130 and 2:30 seconds. Okay, so 130.06, I need to see the market hit that number, and then I'd wait to buy a pullback. Okay, and then again, the initial catastrophe stop loss would be below 128.12, which is the lowest low here, okay? The low that was put in place on August 22nd is 128.15. See, so the market took that number out marginally, okay, to 128.12. So my initial catastrophe stop would be 128.07. Now, again, that's almost, if you were to buy it at 130.06, that's like two full basis points, which is $2,000 a contract on the futures, right? A little much. I would wait for the pullback. I would wait for the market to actually confirm and trade up through the 130.02, right? And then wait for that pullback. But I would need to see the print of 130.06. That would be the trigger, and then I'd wait for a pullback. We might see it today. We may not, but I'm going to watch this. What would be even better is if the market isn't able to take out these highs. So far, the high is 129.30, so it's below these Thursday and Friday's high. So what I would like to see is for the market to kind of back and fill and then maybe create an inside bar, and then maybe tomorrow an inside bar, and then I'd be waiting for that big move to the upside, the penetration up through those highs. So that's what I would be looking for there. Now, my first objective would be the market to retest these highs, the highs that were put in place August 28th, August 27th. So we're looking at a high of 132.02, 132.03. So we'd be looking for over 2 basis points to the upside if we set up down in here. If, right? That's a big if. So we'll see if that happens. So I just want to point that out to you. Let's take a look at the E-Mini S&Ps on a daily chart now. All right, this is the E-Mini S&P on a daily chart. You'll see that we've got their fibs. We've got the 38.2 and the 50% retracement of this move here from this low up to this high. As you can see, the 50% retracement is right there, right in here. Supported nicely. Market's bounced up. Now, the interesting thing is here on Friday. Look at Friday. Friday took out Thursday's high, as you can see that here. And we sold off in the morning hard, if you recall, on Friday, taking out the low of Thursday as well. And then the market managed to rally and close, right? Closed at 1653.5. The low of the day was 1638.75. The high was 1664. So again, we closed up in here. So it's an outside bar. It's an engulfing pattern, and it closed out with, in the top half, not the top quarter. But still, I think this is significant because the market was, in fact, able to bounce back and close in the upper, third to half. And then today, just a few minutes ago, the market opened up even higher. Opened up at 1658, and we're up to 1662 right now, right at the high of the day. So, today's a big, a big deciding day. If the market is able to take out Friday's high being 1664 to the upside, then the level that I believe we're going to try to retest, I'm going to measure from the highest high down to these lows. And as you can see, that 61.8% retracement of this downswing right in here, right? The swing from the highest high in the S&Ps down to this low is right up in here. So I am looking at a retest of these highs, right? We'll take a look. Just slightly below that 61, but this low right in here that was put in place on July 26th, that low was 1670 and a half. This high right here, 1669 and a quarter, right? This high should act as resistance. This low should act as resistance, and this high is very close to those numbers as well. So I'm looking at I'm looking for the market to try to retest these levels. Right where I drew this white horizontal line, where I'm drawing the red horizontal right now. Those are big numbers. If the market is able to close above 1670, okay, then I would expect the market to rally up even further and try to re-challenge these highs again of 1700, at least 1700 again. But I need to see the market take out these resistance numbers, okay? So there you have it. Tomorrow I begin my 3-part video series that lasts a little less than a week that I think you'll get a lot out of. So pay attention to those emails that we will send you tomorrow and Thursday and Saturday. I got a lot of good stuff that I've created here in the last month that I want to show you. I'm real excited. So hope today's video helps as well. Have a great one. I'll talk to you tomorrow. Bye for now.